Hello and welcome to Rupeek for India. My name is Suresh Venkat. I have the pleasure of being your host for today. I'd like to welcome members of the press, senior leaders in the Indian banking sector, founders of some of India's leading startups, industry leaders, and all of you, ladies and gentlemen, welcome. Rupeek for India is an attempt to galvanize the conversation about how credit can unlock for all Indians. It intends to start a thread on how India can monetize its gold by harnessing disruptive technology. On Rupeek for India, we will be inviting thought leaders and change makers to share their visionary ideas over the next few hours. It aims to be a common platform for industry veterans and sector experts to channelize their collective thoughts around bringing change and innovation in unlocking growth and credit for 1 billion Indians. With that, let me tell you a little bit about Rupeek as well. Rupeek is India's fastest growing asset-backed lending platform. Built on a technology, trust, and transparency-first ethos, its vision is to unlock credit and growth for 1 billion Indians by harnessing technology to disrupt the asset-backed lending space through product innovation. Since its inception, Rupeek has successfully disrupted the online gold monetization market in India with its unique 30 minutes doorstep services. With their customer-first approach and trusted lending partners network, they continue to facilitate fast, simple, and safe transactions in over 35 cities. Rupeek's aim is to create a business that is not just competitive in the gold loan category today, but also builds future business models for seizing the larger gold monetization opportunity. Rupeek is working towards expanding its product portfolio in digital asset-backed lending to monetize India's $2 trillion worth of gold. The team is committed to bringing forward disruptive products that will unlock credit for all Indians. And with that, it's time for me to introduce our first speaker, Mr. Ramasubramanian Gandhi, former Deputy Governor, RBI. Mr. Gandhi is a financial sector policy expert and advisor. Currently, he advises banks, finance companies, fintech entities, payment system entities, investors, and funds on subjects ranging from financial regulations to the Indian economy. He is an independent director on the boards of several financial sector entities like bank market infrastructure, account aggregator, information utility, and fintech, amongst others. A seasoned central banker with over 37 years of experience, he was a deputy governor of the Reserve Bank of India for 3 years, from 2014 to 2017. Mr. Gandhi, it gives us great pleasure to invite you to deliver the keynote address at Rupeek for India.
Good morning, everybody. It has been a long story about gold and its usage in India. India has a very, very long history, culture, and the society that is there for more than 6,000 years or so. So in this period, if we have to understand the gold monetization, that is a topic of the day that we have been trying to take care of. There we have to necessarily understand the history of India and its usage of gold. As I said, that gold has been a special commodity for the entire world, not just for India alone. Its speciality has come from its features in the sense that it is a rare commodity, the metal is malleable, and the purity is of highest standard. It has a very special status in the Indian psyche, and as I said, it has a very long history, intertwined with the culture of India for thousands of years. Over all these years, there has been a strong understanding among the Indians about gold and its special characteristics. Gold jewelry is the very first recognition of gold in the Indian society. In its culture, gold ornaments for the women in the household is of very high significance. From day-to-day usage to special display on occasions like marriages, festivals, and ceremonies, gold ornaments are accorded high priority. Adorning gold ornaments is not the forte of women alone. Even their male counterparts also have an attraction for gold jewelry, though to a much lesser extent. For royalties and guards, gold ornaments are sine qua non. It goes further. Indians have clearly understood gold's unique features of its being a savings proposition, an investment vehicle, and a high liquid asset come high quality collateral. History is replete with how these characteristics of gold has been playing a very vital role in the economic welfare of the society. Another unique feature of gold in the Indian society is that despite its high value, it is an asset across millennia, across every strata of Indian society. Royalty, rich, high income, low income, middle income, every type of income groups, you name it. Each one has a fascination for gold, possession thereof, in whatever little quantity or high quantity, with pride and lot of satisfaction. It is estimated that around 24,000 tons of gold lies with the households and religious institutions in the nation. Gold policy perceptions in recent times has been something of a different genre. It is an irony of the role of gold in modern times is that a lot of contrary and negative propositions have been attached to the gold. Public policy perceptions were against gold. This is a very modern phenomenon. More specifically, during the socialistic and the planned era of economics, roughly from 1950s. Though post-reforms initiated in 1991 have dismantled such economic programs, the biases against gold have persisted. There are several reasons for this bias. Domestic mine production of gold is minimal, less than 1%. Imports predominate. About 89% of India's demand is being met by gold imports. And India's demand is the second largest in the whole world. About 25% of the global demand is emanating from India. And in the form of jewelry, the consumption accounts for 73%. These are the features which has led to certain policy biases against gold. First, in the modern era, gold has been considered as an unproductive investment. The argument goes something like this. A developing economy like India needs a lot of capital for ushering in consistent high growth, which will lead to higher standards of living for its population. Every rupee saved by households should be funneled towards investment as capital, thereby reducing the need for import of capital from foreign countries. However, the strong preference for gold buying by the Indians diverts the household savings away from the possible use as investments and capital, thereby compelling the country to depend on foreign capital for its development. The situation is compounded because India is not a producer of gold and entirely depends on import for its needs, as I mentioned earlier. This results in export of savings to foreign countries when the country itself needs such savings for its own development. And this perception resulted in public policy prescribing curbs and at times even banning of import of gold. However, the strong cultural tendency to own gold by every class of society led to illegal import of gold, hawala transactions, and other undesirable and illegal practices. Secondly, during this period of post-1950s, again as a part of socialistic and planned economic thinking, the public policy emphasis was to encourage investment and production and simultaneously discouraging conspicuous consumption of luxury items, and gold topped the list of luxury consumption. In fact, in 1963, the production of gold jewelry above 14 karat fineness was banned. And in 1968, citizens were prohibited from owning gold in the form of bars and bullion. All existing holding of gold coins and bars had to be converted into jewelry and declared to the authorities. Severe restrictions were placed on the stock holdings held by goldsmiths and dealers. Goldsmiths were not allowed to own more than 100 grams of gold at that time. Licensed dealers were not supposed to own more than 2 kilograms of gold. Thirdly, gold was considered as a high-risk and sensitive commodity. Because of the vagaries in its prices and volatilities of an international market, this perception got strengthened. Financial institutions like the banks were prohibited in dealing in gold or funding purchase of gold. Even gold loans were discouraged. For example, in 1962, all the gold loans given by the banks were statutorily recalled and forward trading in gold was banned. Such negative public policy approach towards gold continued even after the reforms of 1991. Ironically, in 1991, it was the gold holdings in the country which came handy for supporting the foreign exchange crisis, for managing the foreign exchange crisis that we underwent in 1991. It is the gold holdings of the government and the Reserve Bank of India again brought succor to ward off India defaulting on its international commitments. Earlier in 1962 and 1963 and 1965, when the country engaged wars with China and Pakistan, again, it was the gold holdings of the country which came handy for supporting the defense expenses during that time. There's a definite policy shift towards gold since 2015. The economic liberalization since 1991 brought several changes in the policy approach towards India's import and export policies in general and its policy on import of gold. From the extreme position of total ban on import of gold, the policy moved towards allowing gold import. Still, the import of gold faced quite a bit of duty restrictions based on, and these duty levels also vacillated at different points in time. Banks were permitted to deal in gold in a controlled manner. Gold loans were grudgingly permitted. This marked shift in policy towards gold happened from 2015. Multi-pronged broad policy thrusts aimed at long-term impact were announced. First, policy measures to encourage public to own financial gold than physical gold was announced. Secondly, policy measures to monetize the current physical gold holdings of citizens were also announced. Thirdly, creating infrastructure for quality control on gold through licensed refineries and hallmarking institutions and infrastructure for trading and dealing in gold were also encouraged. Gold deposits, gold metal loans, gold bonds, and gold ETF are all the products under this new approach. Gold bonds and gold ETF schemes are aiming at steadily shifting public's preference of physical gold into financial gold. By linking these products to the prevalent gold prices with increasing awareness and marketing programs, these have great potential to channelize the public's savings into investment and capital formation. Gold deposits have the potential to monetize existing gold. Going forward, the challenges still remain. We have a long way to go. Making deeper inroads into the psyche of the public is not easy. First, we need to find an answer for people's preference for gold jewelry and how to monetize gold in the form of jewelry. Innovative thinking is needed. Gold jewelry deposit scheme products promising same types or different types of jewelry against gold jewelry deposited today after a tenure of say 10 or longer years can mobilize and monetize existing gold. Secondly, the policy bias against gold loans need to be changed. This bias has resulted in banks and financial institutions missing on several fronts. A high quality collateral was not available, especially when we consider the erosion in value of stock of raw materials and finished goods and aging plants and machinery and buildings and houses, which are the standard collaterals for many loans. A transparent and ready and easy method of valuation of collateral was also missed. considering the opaque, unsubstantiated, and inflated valuations of other collaterals. They also lost in terms of capacity to determine impairment easily, less costly liquidation methods, and salvaging substantial value, often more than the amount in exposure. Often, the threat of auction of the pledged gold led to repayment performance as compared to the threat of auction of other collaterals like shares, stock, raw materials, which did not result in the desired results. The so-called productive assets are replete with unauthentic, doubtful valuation. They lost value when declared as NPA or under liquidation. Therefore, we need a positive and visible mindset of the public policy in favor of gold loans. Thirdly, it may be time to resurrect the concept of a gold bank, a bank which will accept gold deposits, that provides gold loans exclusively or predominantly, certain regulatory facilitation and enablement in terms of bank licensing policy, its cash reserve ratio and statutory liquidity ratio, and etc. in terms of gold will be needed. To conclude, India needs to play along with the Indian psyche of strong preference for physical gold and gold in the form of jewelry if we have to be successful in monetizing the gold for the betterment of the Indian economy. A persistent and patient program to shift public from holding physical gold to holding inferential gold should continue as a long-term measure. Innovative products using options as a tool to address public psychology are warranted. We need a gold bank as a catalyst and market maker to monetize gold. Thank you very much.
Thank you, Mr. Gandhi, for those wise words. It's now time for me to invite Ms. Arundhati Bhattacharya, Chairperson and CEO, Salesforce India, and Sumit Mania, Founder and CEO of Rupee, onto stage. Prior to joining Salesforce, Ms. Arundhati Bhattacharya was the first woman chairperson at the State Bank of India, where she was credited with ushering in the digital transformation era at the company. Under her leadership, SBI went on to be voted as one of India's top 3 best places to work. Sumit Mania is an IIT Bombay graduate who then worked at JP Morgan, Religare, and his family's agricultural business before becoming an entrepreneur in his own right. Sumit and Ms. Bhattacharya, over to you.
Thank you everyone for joining us, and we have Ms. Arundhati, need no introduction, one of the most powerful lady in the country and in the world. She has joined from SBI to Salesforce and 2 different spectrum of the industry and leading both as a top leader. Quite an inspiration, very excited to have her here. Ma'am, I would like to start with one question, which is a personal one. What keeps you motivated, ma'am? Like you are such an inspiration. Your stint at SBI, your stint at Salesforce. I mean, being an outsider, this question always comes to mind. And that too in the middle of pandemic. It was such a big decision and very different DNA. So tell us the motivation secret sauce, ma'am.
Well, one thing, of course, is I didn't know that it would be so virtual for so long. None of us did. In fact, when I joined in the middle of the pandemic, it was on April 1st of 2020. I thought this would go on for, say, 2-3 months, and then I'd be back to where I was. And, I come from an institution which is still very manual. Okay, so I had 2 suitcases of files that I carried home every night for 4 years as chairman. Here, I haven't seen a scrap of paper anywhere. Not one scrap of paper in all the 18, 19 months now that I've been here. Everything is on the system. So the fact is, I didn't realize it would be this virtual when I came in. Probably then maybe I'd have thought it over a little more. But having taken the step, I think what keeps me motivated is basically the excitement of learning new things. I feel very excited. In fact, even when I interact with people like y'all, what excites me is the new vision, because I hadn't thought of it from that angle. And to think of it from a different angle, the same thing, the same offering that we had, that gives me a lot of, what should I say, maybe some kind of a high. I like to have those highs. And as you know, after retirement, I had a period when I was in a non-executive portfolio. So I had quite a few of these advisories and I had board appointments. But the thing is, what happens is that no matter what I do, if I don't see the result of it, then it doesn't give me that kind of a sense of satisfaction. And if you really want to see the result of what you are saying and doing, then what really is required is, in that case, is to have some kind of executive role. And that's why I thought that at that stage, I tried to assess whether I have the energy for it. After all, I'm going into a very young organization, and what would they feel about somebody as old as me coming in? And that too, I'm a total, at the end of the day, I'm a lay person. I'm not an IT professional. But I put all of that aside because I thought the excitement of learning would be great. And it truly has been very exciting for me. I've been learning I've been learning every single day. Every single day. For instance, yesterday, suddenly, my keyboard started malfunctioning. So whatever I was typing, it was coming out reverse. So if I typed work, it was typing KROW. Okay, so I got very puzzled as to what on earth is happening. First of all, I wondered that, am I typing nonsense? Am I losing my mind or something? And then I realized, no, it must be the keyboard. So, of course, I phoned our tech support. They, of course, had a good laugh. They said, just close down everything and reboot. And it solved the problem. Well, so now I've learned, before going to tech support, the first thing one does is close down everything, reboot, and then go to them if the problem persists. So I learn on a daily basis, and that gives me a lot of satisfaction, really. It also puts me in touch with areas that, I knew peripherally, and now I'm getting to know more in depth. And I think, that's actually what keeps you alive and young. In a way, RIL has this motto. Their motto is growth is life. Okay. Yeah. If you're not growing, that means you're not, you're dying. You're not living. So towards that extent, I think that appeals to me. And that's one of the reasons why I made this change.
Amazing, ma'am. I think you have extremely positive attitude, and I must say, lot of modesty. I mean, you have led successfully two different spectrum of organizations, and both critical for the ecosystem growth. And not a lot of people can do this kind of inflection crossing. So kudos to you, ma'am. Coming to this point where you have seen both the spectrums, one is financial services, and that too, largest balance sheet provider, a nation builder, a truly, powerful force in the Indian ecosystem, which is SBI, and now Salesforce, which is a global conglomerate and has a lot of ambitions for India and, Asia region. These two different spectrums are important for bringing credit to masses. I mean, both play their own role. Now, having led both, can you share some of the key insights, ma'am, in the journey which you have observed, that how this transformation can bring credit for masses in an affordable way?
So one thing is very clear, even when we did the Jan Dhan Yojana, as you know, we spent a lot of money from the banking sector in order to get it done. And much of it came from the public sector. Okay. And some of my colleagues, in the private sector, they sort of told me, yeah, y'all develop the market. When it's developed, we'll jump in there. Okay. So I told them, boss, there's no point. You're not going to get under my skin by telling me that. Because for me, this is an article of faith. I believe in the fact that financial inclusion is necessary. And I'll again go back to a small childhood story. In one of our classes, there was a lady, very good teacher. So she one day brought a piece of thin cloth and she told, 4 of us to hold it from 4 corners. And she had another child with a sharp pencil, push it up from the center, like a tent. Yeah. And she said, keep pushing, keep pushing. At one point of time, the fabric tore.
Yes.
Okay. So what she was saying is that if there is a lot of difference within society, then the social fabric tears.
Wow.
Okay. Now, it's something that stuck in my mind. It happened a long, long time ago. And therefore, I really and truly believe that you need to have inclusion in society. You can't have exclusion. And inclusion is the only thing that brings stability to a society. Otherwise, you're going to have things like, the Naxal problem that we had, the Maoist-led problems that we are having internally. So the social fabric cannot bear too much of a difference, okay, between the haves and the have-nots. And the have-nots have nothing to lose. We have to realize that, okay? So we have to make everybody haves. When everybody is a have, then everybody has something to lose if something goes wrong. So they'll all try their level best to ensure that society is stable and that we are progressing on a daily basis. Okay. And this is very well borne out by the PMJDY. When we open those accounts, and we open 1/3 of the PMJDY accounts, those accounts, 97% were zero balance. And there were a lot of people questioning us as to whether, it is one of those typical what are called jumlas in India. Okay. And I was very, very clear that that's not the case at all. This is truly going to be financial inclusion because it has come in a package where you not only have an account, you have a card, you have insurance, you have pension, you have everything put together. Okay. Yes, it also needs a lot of financial literacy. Yeah. Because without literacy, for instance, if you don't swipe the card within 45 days, at least once, yeah, then your insurance is no longer applicable. Okay? So you need to explain to them how to swipe a card, how to put in the PIN, what they can do in order to remember it, how they can keep a card safely, even in a mud house. So all of that means a lot of financial literacy. So when we ran these scams, there were actually in most places, 3 groups within the camp. One was, of course, for opening the account. One was for getting your Aadhaar registration if you don't have it. But one was for financial literacy. So, as you got the account, you also learned how to use it. You learned how it can be leveraged in order to ensure that, if you have this much of savings or this much of DBT, that is, your direct benefit coming from the government on a regular basis, then on that basis, I can give you some loans which can be taken as investment. And in this, this word that loans are actually investments, this lesson was actually given to me by Dr. Hegde. I don't know whether you know him.
Yeah, I have seen his YouTube videos.
Okay. So you've seen Dr. Hegde's YouTube videos. And he calls loans actually investments. Okay. Right. He doesn't call savings investments. He says, don't talk about loans, talk about investments. Yeah. Because you're investing in something which will give you added income flows and therefore a better lifestyle, right? So I think, if you're looking at what is it that is going to ensure equality in our society and inclusion, the way to do it is to ensure how do you get money into the hands of people in order to make them invest into productive assets, okay, not into consumption. Giving money for consumption is no good. Give money for production. Yeah. Giving money for consumption is very important when they are at a very low level. Correct. And there also, a very interesting study that SBI Economics Research Department, ERD, had done. We chose 2 districts where we had opened the maximum number of these PMJDY accounts for women. Now, this is I'm not trying to put down men or anything of this sort. These are actual results. So in these 2 the units, we tried to find, these 2 districts, we tried to find out where the expenditure had gone up most and where it had come down most. Okay. And in both of these 2 districts, we found that the expenditure had gone up most for medicine and then for tuitions.
Wow.
Okay. And the expenditure had come down most for intoxicants.
Quite
now,
fast.
That tells you the story, because if you're really going at the consumption, it must be for people where if they consume, it will improve their health and education. Okay?
Yeah.
That level, yes, consumption is necessary. But beyond that level, you have to ensure that you are actually giving money for investment purpose, not for consumption purpose.
This is such a phenomenal, background to the story. First, starting with the example you quoted, I couldn't have visualized a better example. It's something I'll pass on to my kids as well. Very interesting way to, articulate that thought. And second, what is surprising is that it's almost like a butterfly effect where these things which you had initiated, and now the entire ecosystem is seeing a benefit of it. We had Demon, and had it not been for this Jan Dhan Yojana, we didn't have the access and ability to do either, these digital transfer mechanisms or give DBT benefits. Just have compounded to massive, defining forces.
Even during the pandemic, believe me, if we had not set out, see, you can't just give them a card and not set up the POS terminals. Okay.
True.
So, and there are only 2 suppliers worldwide for the POS terminals. Okay. So we had to go after them. In fact, there wasn't even enough plastic to get the cards made. So, so many logistical challenges had to be addressed by us. But the fact is, what happened during demonetization and then during the pandemic is the kind of problems we may have had otherwise, we definitely saw much less of it. Because these accounts were there, these cards were there, the POS was there. People could do so much on the digital field. And actually speaking, I think India became more of a digital adopter than many, many other countries because of these things.
Oh, phenomenal. The more I have spoken with you in the last 15 minutes, I've realized the magnitude of movements such great institutions make through, apparently small moves, but they compound to become something much larger. So really appreciating the scale. One question, ma'am, linked to this is that now you have been part of leading one of the largest financial services and now tech organization. How do you see that this problem statement which we have, where out of this, 83% of gold of India, holding of India, which is lying with in physical form in Indian households, how can we bring this back into circulation? Because one of the things which has been tried from Morarji Desai government to Prime Minister Modi's government is this. We had some success, but the scale of problem is much larger. How do we compound it? How do we use technology to change the gear and, unlock the power of gold?
No, I fully agree with you. Like I told you, savings must be investments. Today, gold is just savings. Okay. And in fact, I remember having a conversation with Dr. Rajan when I had just joined the bank, and he was asking me, why is there this huge, demand for gold in this country? What is it that drives it? So I was sort of trying to relate it back to what I had seen in the villages. In the villages, it's very difficult to store value. Okay. Gold serves 2 purposes. One, it's very easy to buy and pledge. Yeah. So there is an ease of, the liquidity is there in that. And the second thing is it also serves as a status symbol. So somebody wearing earrings, gold earrings or a gold nose pin has arrived in the village. They have, no, it's true. It's true. And because of that, and we had a feudal society, there's no doubt about it. It's changing now. I don't think your spouse will want to wear gold, but our generation, it was still there. Correct. So it is a feudal society. And in that feudal society, there was something called status. And there was also called your store of value. Now that store of value, again, as I said, gold is first of all, in very small space, you can keep it. So, it doesn't need a lot of space. And as I said, it's very liquid. But the problem is that there is a lot of store right now in the country. And this capital, we are not putting it to productive use.
Yeah,
That's absolutely correct. We say that we are capital starved. Actually speaking, if we could, make this gold come in as capital, then we wouldn't be capital starved. The amount of gold that is there but for that, we need, people like y'all to go at it in a more methodical way. Similarly with the banks. For instance, I had a scheme for a tractor loan in the bank. And to my horror, I found that it had 46% NPS. So we scrapped the entire loan. That entire program we scrapped and we redid the whole program. And this time, earlier, what used to happen, we used to attach it to a crop. And then 1 year after the crop, you start repaying. So that means if you're taking it for cane cultivation, which is an annual cultivation, you're not repaying it for 2 years. Now, after 2 years, the borrower is gone. There's no connection with the borrower at all. These are retail borrowers. So we scrapped that scheme and we said it will be a EMI scheme because tractors don't sit and wait for the season, agriculture season. They're used for haulage throughout the year. So we made it an EMI, but we added 2 components to it. One was that we'll give a lower interest rate if your spouse is a co-borrower. Because we found that the women, they sort of forced the men folk to pay up. And then we said, we'll give a much lower rate of interest if you also bring in her jewelry as collateral. Okay. And what this does is it's win-win for everybody. Because the jewelry then, becomes a possibility for making your loan much cheaper, therefore making your investment much cheaper. For us, it acts as a measure of security. Yeah. So everybody in the whole bargain wins.
Yeah.
And even for the villagers, we used to tell them, actually, your gold will be far more secure in our vaults than in your houses. And they agree. Okay. So the thing is, we have to work on this in various forms right from the bottom. And we have to change this mentality that, you have to actually invest. You can't just save. If you invest, yes, you can invest in gold, but use it, make it liquid enough in the DMAT format so that, you can easily use it for any kind of investments that you need to make. If we can do that, then definitely we'll be doing the entire country a big service.
Wonderful thoughts. That's limited learning. Again, we are being very new and very small in this space. But limited learning, what you absolutely said is that there are 2 types of players. One are the big balance sheet provider whose job is to manufacture this money from deposits and do it in a way where nation's financial ecosystem is secured. There is no risk. And then people like us who can do the legwork and who can do the tech investments in helping these giants put up distribution channels and put up execution capability, which helps them sort of reach to hinterland of India. Some initiatives where we have now tied up in business correspondent and sub BC models where we are able to reach to probably 1000th village and town, which otherwise were not accessible. And I have personally visited as some of the SBI branches. The amount of transactions and the pressure branches see is enormous. So yeah, I mean, if we can add a tad bit to public sector or private sector banks in relieving that pressure, that would be a great joy. So yeah, I completely concur on that.
And we today have the instruments for doing it. See, earlier, for instance, there were a lot of hassles when somebody brought in gold to pledge. It was very difficult to understand whether it was gold plated or not. You had the specific gravity test, all kinds of issues. So, today you have the assaying machines, and you can just, do 3, 4, 5 points of assaying and you will know the quality of the gold.
Absolutely.
So, what needs to happen also is, the prices of these machines need to come down, which it definitely can. We are probably not, putting that much of importance on it. But if every branch of yours had 2 assaying machines and people were just coming in and getting their gold assessed and then accordingly, getting the loans for whatever is required. And then, the whole system of transferring the gold into custody and giving the gold back, if we can make that, use more technology to take care of those pieces, this is definitely an area of unlocking a lot of that.
Understood.
Because most of the time we don't wear these stuff, how many times have we worn it? It's all sitting in the vaults. Okay. So if we can get them out of the vaults and get them working for the country, it would be definitely a big service.
Absolutely. I couldn't agree more. I think that's what I tell team, that, the joy of building a company which can add some bit of value to this nation building, a prime of our life would be successful. So we should see it that way. So I completely appreciate, ma'am. Ma'am, one question. Now, you have been on several boards. You have been with regulator, policymaker, and tech ecosystem. You understand strengths of each ecosystem. Now, what kind of interactions these three participants should do so that value gets unlocked? Today, there are attempts in terms of sandboxes, in terms of accelerators, but is there more where these thoughts can be exchanged? Because through dialogue, we will have some hypothesis formation, some testing, and some ideas will scale. So any thoughts, ma'am, basis your experience and your knowledge about these three, we can go about doing this?
So, RBI has an innovation council. And, I would suggest that, you can put in some papers into that innovation council and have them look at it. Because if you can do that, then definitely, this is something worth taking note of. Gold is actually an area of interest, both, with the earlier two RBI governors and even the current governor. Because if you remember, he was also, in the union government. And even at that point of time, the gold sovereign bonds that came, I think he's the one who launched it. Oh. So actually, it's very close to his heart, as to how we can get people to have the comfort of having gold, but not carry the risk and make it liquid. Yeah. Making it liquid is what we really want. And we want to do it in the organized sector, not in the unorganized sector.
Of course.
Unorganized sector gives you far lesser interest, and here you have solid security. So there is no reason why your risk appetite shouldn't make you bring in the money at a much lower interest. Whereas in the unorganized sector, actually what is happening is this becomes a form of exploitation.
Yeah.
They do give the loans, but they give it at unreasonable rates so that ultimately that gold never goes back to the owner. They spend their lives paying just the interest. They are never able to catch hold of the principal. So we need to very methodically weed out the unorganized sector in this area and then create an organized way of doing this. How much of it can be done in a manner that is, because there is a physicality to it, okay? How much of it can be dematted? People who are using it, as I said, not as a status symbol, but just as an investment, they will demat it without blinking an eyelid. In the rural areas, however, as I said, there is a status symbol to it, okay? So there you have to do a change of mindset. Wow. That you'll have the gold. You want to accumulate gold for your, say, son's wedding or your daughter's wedding, whatever, okay? But the only thing is, how do you ensure that your gold is actually, people are okay about taking it in the dematted format, which makes it so much easier for you to give value to it.
Yeah.
Okay? So, what happens is you create schemes that will enable them to accumulate these dematted gold. Yeah. At a particular point of time, they want the physical gold, it can be delivered. Yeah. But in the meanwhile, in all of these years that the child is growing up, you can actually use this several times over for investments and then, claim it back as your investments reap the money. So I think, we have to come up with ideas like these, and it's a question of changing people's perceptions. And believe me, whenever somebody has asked me what's the most difficult job I've done, I think it's changing perception. Perception changing is very tough because it's inside people's minds, and playing around with minds is very, very difficult. But what you then need to do is showcase a few such things. Once you showcase and people see the advantage of it, then the copying of it will start happening, and then you will see that it is burgeoning. But I do believe that there is some amount of change of mindset. If you look at the gold sovereign bonds that come out and the uptake of those are not bad uptakes at all. I think they're always fully subscribed. So people are beginning, as I told you, it's people who are investing in it now don't see the point of having physical gold at all. But people who are not really truly understand the meaning of investment, they are still going at it, hammer and pounds, and having the physical stuff. So we'll have to move it from the physical into the dematted piece, as far as possible and as quickly as possible to make this really and truly liquid.
This is such a nuanced understanding, ma'am. I mean, we have been in the industry for so many years, but listening to you, I can go on, and probably I'll be bugging you with more questions, but this was super, super insightful discussion. And I think the point which you highlighted, we'll definitely ponder and sort of circle back. One of the other things we have observed is loss aversion, which people are, which stops them from getting into the demat form. And I completely agree that the ultimate answer is demat form, nothing else. So thank you so much for sharing such an insightful information, such an engaging discussion. I'm sure everyone who's watching it is going to enjoy. And ma'am, wish you all the best. Thanks for taking your time.
Thank you, Ms. Bhattacharya, for these valuable insights on savings and investment. And also thank you, Sumit, for being the moderator. Our next session is a panel discussion on how to build India's gold monetization playbook. May I first invite the moderator, Suresh Nambiar, Head India Gold Policy Center. May I also invite our other speakers, P.R. Somasundaram, Regional CEO, India World Gold Council, Harsh Dugar, Country Head, Wholesale Banking, Federal Bank, G.R. Sairaj, General Manager, Retail Banking, Karur Vysya Bank, and Gaurav Kumar, Founder and CEO, Credit Avenue. Gentlemen, over to you.
Esteemed panelists and all the viewers, greetings from the India Gold Policy Center at IIM Ahmedabad. I'm Suresh Nambiar and I head the center working on a mission to make gold trade current account neutral for India. And we believe that this will be possible through formalization of the trade, financialization of gold, creating market infrastructure institutions, a consumer-centric gold monetization scheme, and supporting functional and technical changes from the way the business is being done today. Can I say gold as anti-fragile, borrowing this term from Nassim Taleb's book, for the reason that it remains the only asset, at least since 600 BC. It has absorbed all the shocks and volatility in social, cultural, political, and economic cycles. And India been using gold since then, and our value systems when it comes to gold hasn't changed a bit. With about 30,000 tons of gold with households and adding onto it every year, how do we build the playbook for monetizing this gold? To discuss this, I'm joined by Mr. P.R. Somasundaram from World Gold Council, Mr. Harsh Dugar from Federal Bank, Mr. Sairaj GR from Karur Vysya Bank, and Mr. Gaurav from Credit Avenue. Such a pleasure to have you all here. Thank you very much, Mr. Sumit Mania and his team, Rupeek, for conceptualizing on this topic for discussion. So let's get this started with a quick self-intro from each of the esteemed panel members. Let me start with Harsh and we'll move to Gaurav, Sairaj, and Mr. Som. By the way, as you give your self-intro, let's also start off the discussion by just adding a definition, your personal definition of what do you think about, how do you define monetizing gold as? Over to you, gentlemen.
Okay. Good morning. I can still afford to say good morning. It's 2 minutes before 12. I'm Harsh Dugar here from Federal Bank. I take care of the wholesale banking piece and a couple of other pieces, including gold and agri. gold monetization, I think it's something which is required both if I look at it from the country's perspective and also from the investor class. Gold as an investment opportunity or as a saving product has not really been exploited or leveraged to the extent which we can do. That's number one. And the kind of consumption and demand, I mean, India accounts for about 25% of the gold globally. And we have about 800 tons of gold, give or take 10% here or there. The kind of extent which we can leverage on this in terms of financial penetration, especially in the middle and the lower run, is humongous. That's number one. Secondly, with this gold monetization scheme, we can use the domestic gold which is lying idle significantly to bring down our import of gold and hence significant impact on our reserves and exchange. So I definitely do think that this has significant potential. I think it requires a significant amount of creation of publicity and awareness among both the investor class, among banks, among the regulators to actually popularize and push this across the fraternity. This is from my side. Thank you.
Gaurav.
Hi, good afternoon, everyone. I am Gaurav, founder and CEO of CredAvenue. We are an enterprise debt platform. In fact, what we have seen post-COVID as taking on from what Harsh mentioned, gold has seen tremendous amount of traction from very varied asset class investors. I think gold has come out at a forefront in terms of asset performance. What we have seen is multiple pockets of leverage which will open up. I would not cover what Harsh has already mentioned, but what we are seeing is very strong demand from offshore investors for the first time in this asset class. We are seeing instruments like market-linked debenture backed by gold going to retail investors, as well as this becoming a very, very critical short-term fixed income asset even for capital market investors. So I think we're just scratching the surface. I think the potential is humongous given what this asset class has delivered in the most volatile of times over the last 2 years.
Mr. Sairaj.
Yeah. Glad to Harsh. It's good afternoon now. It is just at 12. So I head the consumer lending for Karur Vysya Bank. I take care of the entire consumer lending bit and also of the personal gold loan front. I take care of both these verticals. Monetization of gold. You see, people in India basically are emotionally attached to gold. When you want anybody to say whether he will be able to sell a milligram of gold, definitely the household would come back and saying that we definitely do not want to sell this milligram of gold. People get emotionally attached, right? So the only way in which we can unlock these assets is by doing this monetization. But how it has to be done, like Mr. Harsh said, a lot of publicity needs to be done. People still do not understand that it is an easy way of getting credit, right? As banks, we look at giving credit, making money by charging interest, right? But to still these people, we need to bring these people out of their shell to feel that this monetization is not something bad, but it is something good, wherein there is more money at hand of all these people to spend, thereby creating a huge boom. So this is under what I feel is monetization. Has a long way to go. People have to understand first, basically, it is not just pledging gold, but keeping their ideal gold with somebody wherein they can increase their liquidity. So that is what I feel as monetization.
Thank you. So,
yeah. Hi, I'm the regional CEO for India for the World Gold Council. My definition of gold monetization is a little larger than gold deposit. What I would think is monetization is a way by which people not only deposit gold and make interest, which is what the scheme has been talking about, but it should extend to all aspects of buying, selling, holding, and collateralizing gold. On the collateralization front, I think we have done a fairly good job. Every bank takes the jewelry, gives money, so people buy jewelry with an absolute guarantee that when they need money, they can approach a bank to take money. I don't think we find this kind of a robust business anywhere else in an organized way. But when it comes to the other aspects, we have fallen behind. So I would like to define monetization slightly larger. Beyond deposits, it must be buying and selling. Both must be, in a sense, monetized, which can only be done when you have organized players coming into the field.
Great, Som. Thank you all for the brief definition for gold monetization in your sense. So just carry on from where you left. Can you provide some examples from the global perspective on how other countries have actually looked at gold monetization and how it's been successful?
Certainly. One, as I said, I started off by saying we have done a fantastic job when it comes to lending against jewelry. We take the jewelry, we keep them safe, and we give them back. Absolutely fantastic. Every bank does it. Lots of NBFCs do it. Therefore, we should first of all say that there is an experience here itself. Okay, but that is done with one single product, which is when the customer does not want to form of gold. Right? That's very important to understand. Now comes the other experiences. You go to ICBC. There is a form of monetization of gold. What they do is in China, what they do is regulated banks, some of them do have a deposit scheme where you can walk into a bank, open an account in gold terms. So instead of opening an account for 100,000, you could probably have 20 grams of gold. And the bank, therefore, just like any other deposit, term deposit or savings account, actually holds the gold in your name, but it's not, you don't carry a physical gold. You just give them the RMB and uses that gold to lend to a jeweler. So that has been a very, very successful product, which the bank has done. Come back to Turkey. They have, again, a similar thing like gold monetization of gold deposit, whereby there are gold deposit days in every week, 1 day a week, where you can walk into a bank with your surplus jewelry and instantly a refinery representative who's attached to the bank checks it and he says, okay, this is 32 grams, an account opened over the counter, they walk away. Okay, and then it is between the bank and the refinery to make sure that it is all done. They, of course, make it transparent to the consumer what is the commission they are taking, etc., so that there is no misunderstanding. But there is another type of product which is happening. Then comes the, as I said, then comes the entirety of buying and selling. You can walk into a bank, buy, place deposit. You can also walk into a bank to buy gold. You see, the very important thing about deposit scheme is that people should not fear, particularly cultures which have found great comfort in holding physical gold for various reasons. We must give them a confidence that not only can you walk into a bank to deposit your gold, you can actually walk into that same place to buy gold. You see, why are the jewelers so considered reliable by people? Because you can go and do two-way trade there. Banks or institutions do only one way. That has to change. So you asked me about the international experience. I could immediately think of Turkey and China, and I'll leave it at that.
Thank you, Som. So if I have to put in a nutshell or lessons that we take from there, one, they provide the confidence to consumers. They are providing convenience by having this good gold deposit days, and also providing products which are like on a forward for future purchases, and not looking to the form of gold that they are having in negligible quantity. So here, may I request Mr. Gaurav and Harsh to throw some light on what do you think? What are the kind of products that you think can actually be a good success in the Indian market? The reason to ask this is the gold deposit scheme, if I'm not wrong, started in 1999 or 97, And since then, our holdings have actually grown to 30,000 tons, but the GDS GMS total holding is only about 23 tons. Okay, so that's a clear thing about how the consumers actually perceive the monetizing the household gold, and there's something about making them, providing an incentive of future purchases. If somebody would have thought about it in '97, there's quite a lot we would have monetized already. So, what are the kind of products that you think could be quite successful in India, having understood the Indian consumers really well? Down.
Harsh, why don't you go ahead?
Okay, sure. Okay, there are quite a few things. See, I'll just tell you what are the advantages when I look at it from as a lending institution against gold. Like obviously, gold is one of the safest product. The only risk which you run is about frauds and spurious gold. But even then, the losses is just about 0.1%. The loss given default is next to nothing. And on account of these reasons, the capital allocation for lending against gold for bank is almost close to zero. So it saves a lot of capital for a bank when they are lending against it. However, on the flip side, there's a lot of stigma attached when people look at gold or pledging gold. So much so that many banks, in fact, we have also been discussing about it as to how can we get the benefits of these which accrue to a bank in terms of lower interest rates and convenience to the consumer.
Right. And I think that's one giving a significant flip to the customer, because if the cost of fund does not come down, as Harsh said, the other options are, should I take a personal loan? Because look at the end customer, right? Largely coming in from a rural, semi-urban. Now, apart from gold loan companies, fintechs are reaching out to the same customer. Personal loan, companies are reaching out to the same customer. Some of the microfinance companies are reaching out to the same customer. Now, not only there is a stigma, but there is lack of incentive for them to really go out and put this out in the open, right? So I think with banks taking the forefront, I think KVB, Federal, and some of the others have genuinely over the last year and a half, 2 years, we are already seeing it, has led that charge where end customers are benefiting. We have seen a rapid reduction in cost of fund. The other piece is on the underlying gold loan product itself, right? So today, if you look at the underlying gold loan product, has become a bit synonymous with, I would say, emergency, right? And I think for us to, again, make it destigmatize and looking at it, how do we look at the underlying gold loan product itself, right? And how do we encourage, Harsh made a point around mortgage, how do we encourage, especially in the rural and semi-urban areas, for people to come out and actually look at this for their secured SME loans, right? And how do they go about business loans using gold? That's on the underlying product side. I think the product itself needs to be looked at closely to go away from consumer. The third point I would make it, how do you make the product also capital markets friendly? Banks have taken a significant initiative. We are also now seeing capital market investors taking a lot of interest, exactly to the point Harsh made. Even in the last 2 years, this asset class has stood out. So what we are seeing is mutual funds in particular. I think this as an asset class is one of the, not only the safest, but also provides a very unique proposition for short-term, short-ended fixed income asset, right? So I think you're seeing a lot of interest coming out from there. We're also seeing a lot of retail investor participation on, I would say, market-linked debentures backed by gold, right? So to summarize, I think one, the cost of fund will be a big driver for monetization. The change in the underlying product itself and bringing in more innovation to take this away from emergency, right? And also making it bank plus retail participation to come in, I think on the other side will start driving a larger participation.
So how I look at it is like secured credit is what the banks and the financial institutions are looking at when it comes to gold monetizing. So, Mr. Sairaj, if you had to reach out to your customer, if you have to have a promotion strategy in place, how are you going to sell this concept for the under the pillow gold or for the future purchases? Let's talk about within the existing regulations. How would you go about
the existing regulations? I don't know whether people are aware. We already have a very good app called Delight app in our as an offering for all of our customers, wherein in the app itself, we have made it possible for a customer to take a gold loan out of it. It is not just a gold loan, it's a limit which can be sanctioned to him. And for a period of 3 years, he can open, close a gold loan without any additional charges. Okay. So this has been quite successful. It has been launched on a very, very low key only. Only in few towns we have launched it. We have been talking, it is just on the one side of it. Being a bullion bank, okay, we can accept, we are selling gold, we can take deposits, we can sell it. Now, how do you popularize it? It is going to be a problem now. Again, only like what Mr. Gaurav said, gold is now used as an emergency commodity only. Only during the period of emergency, somebody is in the hospital, people rush to take a gold loan. How do you make it a common product wherein you look at it as a collateral security for your funding? That is where the biggest challenge lies. Now, State Bank did launch a product with a margin that is for a home loan, taking margin by way of a gold loan. That is taking a gold loan as margin and then launching a home loan. Some products like that have to be thought about by the industry, how we are going to do. In fact, the credit card, which Rupeek did discuss with me when they came here to Karur, it is a good option. See, we are not giving credit cards to anybody, right? You want the best of scores, you want the best of BRE, that is your app score has to be good. All the scores need to be good for giving a credit card to a customer. But there is a huge chunk of people who are not aware, who do not even have who would love to hold a credit card as a prestige, as a card of prestige, and then they do not have the means to hold it. But gold is available in every household. If this gold can be monetized and be made, that is available, these people also can be holding a credit card. They can also travel, they can also use it, they can get all freebies, they can get points, everything can be bought along. So the challenge today is, how do you make it available to people? From our bank's perspective, like what Mr. Harsh said, we are looking at products either on the SME side, on gold, on home consumer lending side, on personal gold side. We've been trying to promote this product. Again, acceptability of this customer to take this as an ongoing product. It has time has to tell us whether we are successful in this. But we have started making available such schemes. On the first front, we have launched the scheme on our app. So it's going to be a long-term process. Let us wait and watch.
Again, I've been seeing more thoughts related to gold for credit. So I'm going to come to you asking for a new idea on this. But before that, Mr. Harsh, how would you look at it for promoting for the future purchase, the future consumption? How are you going to sell this? Create a product for this?
I'm glad, because the three aspects when we look at gold, which is often missed out by people. People typically look at, on a sovereign gold bond, you get a 2.5% return, right? It's an 8-year kind of a thing. People tend to compare this with another asset class, say a fixed deposit, and say the return is low. There are two other aspects which actually most people, including bankers, miss out in terms of telling their customers as well. That you also benefit from the price appreciation of gold. Now, if you look at the last 20-year history, the gold was sub $250 an ounce. It crossed $2,000 an ounce, and it's more or less around $1,800 an ounce. So if I look at that return, so if somebody were to hold gold, get a 2.5% return, plus get a capital appreciation, which people not normally talk about. And third aspect, which is typically a significant benefit for people in India, is because gold prices are linked international prices. So you are also impacted by the dollar rupee value. So you build in another 5% rupee depreciation, which comes in as a return. So even if a dollar remains at what levels it is at, the rupee value of the same per ounce is 5% higher every year. So if I were to look at it, if somebody had invested in gold, say 20 years back at $250 an ounce, The dollar rupee at that point in time, I'm not very clear, so don't hold me against it. But what I mean about 30 rupees to a dollar, today dollar is 75 rupees. The gold price today is about $1,800 an ounce. So my pitch to any person to invest in gold would be in two aspects. One, return, covering 2.5% return or 2% return, which people can get, 2.25. Second, along with that, built in is the gold price appreciation over extended time horizon and insulated by a rupee depreciation, which helps you from a return perspective. This is one aspect, which is the return aspect. Secondly, in general, I personally feel from a portfolio diversification point of view, gold does make an important asset class which people should look at because it helps in risk diversification as well. And especially in times like stress or any kind of financial crisis, typically the go-to asset classes typically has been gold, and we have seen that traditionally. So from these two aspects, I think it's a very important asset class which we should be pushing it down to people in general and not just for emotional reasons.
All right.
That's all.
So if you have to talk about how do we ask the consumers for the future purchases, how they are to be sold this idea, who actually the consumers knows it really well about what the gold stands for. So, but then creating more value to them in their purchases, how do we go about it?
Well, as you said, first of all, banks have to play a greater role even in selling gold and in buying back. Unless there is a two-way like FX, it is going to be even difficult for them to come out with new ideas. We can have any number of panel discussions, but unless you unleash them, I mean, you unleash them in gold lending and see what people have done, including NBFCs. Then there is competition. Then so you can monetize it that way. Second, as I told you, just move monetization away from deposits. Okay, monetization is about making gold a very an asset which you can use, buy, sell, various things. So it is actually a financial asset class, not something which you buy and then store it in your vault, waiting for the bad days to come. It should not be that way. Now, coming back clearly, when you say monetization, how do you promote buying? You see, when you buy off a bank, again, I'm saying that here banks have to be allowed two-way trade, but it is not just, that's not going to be enough, because when you look at the entire subject of monetization, as I mentioned, you also have to look at existing practices, whether it be at the point of buying. Still 95%, it has come out in our research, and in fact yours also, of gold is bought using cash. Okay. Now, unless that practice is changed, you're not going to be very successful in monetization of gold. Okay. Second, the PR has to be very different. Even when we talk about it, it should not be like I'm taking away your gold. It has got to be like, your gold is available to you anytime you want. That's why I said two-way trade. That fear is always there. See, there is a fear of taxation, which has to be dealt with. That's a bigger policy discussion. But there is also a fear, even if I bought gold properly, am I going to get the gold back, or am I going to get the value of gold or something like that at the point in time? That is why, making sure that they get back gold. And how do you do that? Because I also sell gold anytime you want. That fear also has to be removed. The fear of getting gold back. Not in the same form. I'm talking here about pure gold is important. And, you also have to look at the current practices of, why do people really want to hold surplus gold? I'm not talking about gold which they use on a daily wear. There's a huge amount of gold which they buy and keep it surplus. Don't even use it once. Probably they use it once in a lifetime. Why do they keep it in the vault and not really want it? And for which we need also a bit of data. I'm not sure we have enough data on the type of jewelry that has been collateralized. I don't think it's available, not at least to the best of our knowledge, what kind of gold comes in. And then compare it with what kind of gold is being sold. You will get a little more information about what should be done to monetize surplus gold.
Absolutely, Som. I think you hit the nail there. I think that brings to the point of trust and integrity. How do we build that? And does the existing infrastructure actually facilitate building that kind of trust and integrity in within the value chain. So for instance, if I'm buying gold today, I don't want to take it, but let it be there in the vault, and I can still continue to use for any of my purpose. So if we have to talk about how do we build, what kind of technology needs to be built in, what is the kind of infrastructure that needs to be created? Would you have any views on the existing infrastructure? Does it support it at all? And how, let me start with Gaurav. How would you want to play this out by creating the required infrastructure for this?
So 3 points on this, right? And taking a cue, what I would say is, if you look at just the demographic going forward, right? And whatever we might say, gold as an asset class, a financial asset class, today is sitting between equity, fixed income, excuse me, and now crypto, right? So a lot of I would say from a demographic dividend perspective, a lot of money which is coming in, right, is going in multiple asset classes, right? So our right to win as an asset class itself has to be fundamentally looked at, because then a lot of this will not come in from an investment perspective, right? So just infrastructure about points which Harsh made, right? Infrastructure about the index, the gold index, how that index has performed. Can you buy into that index? Is it very defensive, like we see, defensive stock performing year after year, right? So that, to my mind, from an infrastructure, not just technology, but just infrastructure where people are able to understand the asset class much better, and especially the generation which is now moving or reallocating money into different asset classes are also making a significant allocation to this asset class, right? Because otherwise the asset class will not compound over the next 5 years, 10 years, 20 years, right? The second is, just how do you make it more pervasive in terms of binding this with a lot of other platforms which are out there, whether it is investment platform or when you're consuming something, can you actually, invest in gold or save through gold, right? For each consumption you make, right? What are the patterns behind that? So I think some of that, to my mind, is required for us to ensure that there is enough, surplus which is going into this asset class.
That being said, digital gold, if I have to say, has taken a big leap on that front, even reaching out to them through the microfinance institutions and all, and the consumption of digital gold not being limited just to urban investors or consumers. So, but then, as you know, much of the consumption or much of the holding still lies in class 2, class 3 towns, more than urban. And how do we go about tapping that? What is the kind of technology on the technology front? How do you go about it? So, let me tell you where I come from when I ask this question. So an example being today in Kerala is, there's a major flood there, and still a bank officer has to be at the bank because he has a key. Because unless he reaches the bank will not be open. And if he doesn't report there by 9 o'clock, it gets escalated. So we still live in those conventional way of operation. So how do we go about changing that? And what? So when you're talking about a situation where 24/7 gold is made available, 24/7 credit is made available for the consumers, where do we need to step up? Harsh, to you.
Okay. See, there are obviously a lot of innovations which we can do around, both in terms of product, secondly, in terms of distribution or reach out, whichever you would want to call it. A large part is being bought in by the fintech company. Now, if you look at Rupeek, doorstep banking is something which is very convenient for two reasons. One, you don't have to waste the time stepping out. You have somebody calling on you, picking it up. So it saves a significant amount of time. Secondly, we have observed that many of the customers don't like stepping into a bank to pledge gold because of the social stigma. The moment it's doorstep banking, it removes a large part of it away from that. So if I look at from a distribution point of view, fintechs, business correspondents, tie-ups are something significant which will bring in two advantages. One is the convenience of banking from your home. Secondly, time saving. And third, the time available for you to do it. Typically, a banking hours is 10 to 4, 10 to 5 kind of a thing. And after that, it's not available. So this brings you that convenience. The second part is how can we bring in automation, which I spoke about is like a gold ATM, where you have a system where somebody can come in, deposit the gold into an ATM, has a picture clicked of it, it's a receipt given to him. That's bringing in automation over there. So these are the two products which I feel can bring a significant amount of difference in terms of reaching out to the customers at their convenient timings, at their convenient location, rather than them coming to us. And this is something which like Rupeek is doing, and a couple of other players in the fintech space are doing that part. The third aspect, which I feel very strongly is creating a significant amount of awareness. That unless we do, another advantage is many of the people who take gold loans are the ones who have not availed finance from the formal system because they don't have a formal CIBIL score. And banks traditionally don't go into credit surrogates. They look at more at scores and other things, or a salaried employee kind of a thing. So once you start borrowing through gold, you eventually start developing a credit history and eventually a credit score. And then you can look at going to the formal borrowing asset classes. So it helps you in terms of graduating to that. And that's a level of awareness, like somebody mentioned in the call, in the discussion, is a gold credit card. Many of them are not entitled to a credit card, but a gold credit card could make a significant difference. Similarly, gold-backed mortgage loans would make again a difference. So these are the aspects which needs to be popularized. This is the place where I feel banks, especially, and a large part of fintechs, need to tailor-make products and create a lot of awareness and publicity around it to make this as an asset class which is worth pursuing even by the customers because of either lower cost of funds or convenience or the other benefits in terms of taking and availing it.
Okay, we have 8 more minutes. So if you have to recommend about how do we create a common business infrastructure, because it looks like we are still at nascent stage in terms of taking that first leap. So a common business infrastructure and is something that could be the first step, if I am not wrong. Gaurav, would you have any opinion on that? On how are the investors going to look at investors, in the sense the private equity investors or the seed investors? How are they going to look at this as an opportunity? If somebody comes up and pitches an idea that, okay, let's have a logistics company which is going to provide the common business infrastructure for sourcing from various locations and for Rupeek, for organizing like Rupeek or any other, or a common assaying center. So what's your thought? Like, how would the investors be looking at it?
Well, I'll just share the pros and cons of what we hear from both equity investors as well as debt investors, non-banks. So I think there is tremendous amount of interest and demand because just given that the asset class is secured, there is demonstrated performance. There is a lot of demand for both on the private equity side as well as on the debt side, as I was sharing, right from mutual funds to retail investors as well as offshore investors. I think few things which are required more infrastructurally to my mind. I think still we are very early days of establishing this as an asset class. And this asset class at least has an intrinsic value. Today we are seeing a lot of asset classes with no intrinsic value, cornering a lot of savings, right? And that to my mind is the most important piece, right? So like what we saw AMFA doing for mutual funds, both equity and debt, I think there is a lot of focus which is required for us to make this as a mainstream asset class, right? And as Mr. Sairaj and Harsh said, I don't see this as a challenge of what's happening today on the loan side. It's almost there, and we can build a lot of partnerships. Co-lending is going to genuinely accelerate this. We are seeing on our platform, just to share, we do now 70,000-80,000 loans a day on co-lending. The most amount of demand we are seeing is coming on gold loans, right? So I think that is absolutely clear. But my own personal suggestion would be that we need a very, very strong focus to first create this as an asset class. If we don't do it, I think next 10-15 years, we will not have the amount of savings which will move to this asset class. And then this asset class will continue to be a surrogate where somebody is actually using it for emergency or is only and only using it for some emotional and intrinsic reason. So I think that would be the most important piece. Otherwise, equity investors and debt investors will look at it more as a defensive investment, but not as a promising asset class which can actually grow. One piece I will leave it with you, I think, which comes up in our discussion. So if you look at one proxy, which is the credit-backed gold loan business, at a sector level, this business has not grown like some of the other sectors, right? Promising sectors like housing. Now, consumer for different reasons is scaling up very rapidly, but gold is only scaling up, in a certain fashion, right? Which is also to do with, how much of that underlying gold is being monetized. And within the country, large part of that is being, driven through the South, right? So I think that, to my mind, is what will be required for us to really unlock the potential. There is enough and more demand, as I said, if we get this right.
Give it to Som on that. Som, what is that's a suggestion that we need to work more towards creating an asset class, and then possibly work towards building the common business infrastructure. So, what's your thought on it? How do we go about?
Well, my simple thing will be allow the banks. We could do so many things. When you talk of gold, because it is such an old industry, it has got certain existing practices. It's freely available in the country outside of banking system. It is largely cash-based, as we have all know. So with all those, you can't change them overnight. You can't just go in and say this is the desired model. But at the same time, you have fintechs like Rupeek of the world coming in and showing the way. What we definitely require is allow the organized players a lot of latitude to experiment, okay, within certain boundaries. So currently, what's happening is that experimentation is very, very restricted. Banks, as I said, allow banks to even buy back gold. Why should it be monetization? Buy back gold. Like in China, allow banks even to issue their own gold coins. Where they mint it is not there. Allow them to issue their own bank. Similar things. I'm just not going to go into a whole list of things. Give them latitude. Allow the organized players, the new fintechs, which are responsible, to come out and experiment. I think we will find some elegant solutions.
Okay. So may I consider that would be your last line on what should be done 5 years down, and also without that, it's all going to be status quo?
I would think so. Absolutely. Allow the organized players, new fintechs, leverage their ability to transform the market. Don't try and plan everything to the last, mile. It is not possible for any plan, any program to think through everything, because gold is such a diversified industry within India. Allow it to the players, give them latitude, and at the same time, as I said, also try and change some practices very slowly. Like if we can move the cash-based payments in gold to completely, card-based, but nobody is going to pay 1.2% to buy a gold and pay that 1% or 1.2% MDR. Absolutely not. You'll have to find a way of doing it. Second, bring institutions like pension funds and all that at some stage, I'm saying, to invest in gold. So you have more and more organized players dealing with gold as an investment in the mainstream market, rather than just waiting for the odd, difficult day to bring gold out of the closet.
Thank you. Mr. Harsh, your last line on
Yeah, only one thing, while we've covered more on the individual side, one thing which I think as a country we need to focus on, because the kind of gold which is there with temples and trusts is not funny. When you're talking about 30,000 tons of gold being with the country, we're talking about a $2 trillion lying in gold and lying idle. If we can get these trusts, these temples incentivized in some way or the manner, we will see a lot of significant traction happening in terms of being self-reliant and not having so much of import. So this I'm coming in from a very, very broad, because largely our discussions have been around individuals, demand for individuals, investment by individuals. But this is a significant portion which will come in to give the gold which is lying idle and reduce our reliance on imports and obviously conserve exchange reserves for us. This is one aspect of it. The other thing which I very strongly feel, and what Shoma was also saying, is the government and the regulator's job is to create an enabling environment for players to play around with that. So there are quite a few things they can do. To give you a few examples, exempt CRR and SLR on gold deposits. And you'll see banks pushing that product. giving gold lending a priority sector tag, you will see banks again pushing for that product. Creating awareness by the government and the regulators will make a significant impact. So I'm saying these are small baby steps. What the regulator and the government needs to do is create an enabling environment for fintechs, for banks, for NBFCs to bring this more into the organized sector from the unorganized sector, from the cash to the formal system, banking system. So this is what I would say from my side.
Thank you so much, gentlemen. I think that was quite insightful, and the playbook is well drawn, actually, if you have to put down all the points and connect all the dots there. Thank you, and I hope all the viewers did find it really insightful. Thank you.
Thanks a lot.
Thank you so much.
Fascinating insights there. Thank you, Sudesh, and thank you, panelists. Like I told you a little while ago, Rupeek's vision is to unlock credit and growth for 1 billion Indians by harnessing technology. Rupeek aims to disrupt the asset-backed lending space through product innovation. But to tell you more about Rupeek's vision, may I invite Sumit Mania, founder and CEO of Rupeek, back on the stage. Sumit.
Hey all, as we move forward, we would love to share what we have been working on in monetizing India's gold. We think this is the version of the future which is going to help India monetize its gold. The 4 products which we have been working on are, first is gold powered card. Now the concept is fairly simple. At a household level, you have so much gold, and yet unsecured credit is only available to 4 to 5% of Indian population. Now what we are trying to do is to use gold powered credit and change the form factor in form of a card. Customers get a grace period to manage their cash flows and manage their expenses. And this enables millions of Indian households to get access to credit in a cheaper and safer way. This is our first product, which is live and growing very fast. Second product, which we're immensely proud of, is Gold DigiLocker. This is a very simple product. Historically, every Indian household has tried to get a bank locker. Unfortunately, real estate is limited. You only can get so much. What we have done here is we have provided gold in a digital locker, which can be accessed through your app. You can get the pickup and drop at your doorstep in less than 60 minutes. All of this, and you get access to cheaper credit at the click of a button. Again, something which we believe is going to revolutionize how Indian households consume credit. Looking forward to this one. Buy now, pay later has been growing tremendously across the globe. Why India should be any different? Here, every household has gold savings, which can be converted into digital credit at a click of a button. And what we have done is we have taken this credit and connected it with the spend universe. This, we believe, is going to give masses affordable financing option at their fingertips. The 4th product we have been working on is Gold Teller Machine. The machine would be fully automated gold appraisal machine, in which customers can complete their KYC, deposit their gold, all of this in a matter of minutes. We intend to roll this out with as many lending partners as possible and get access to as many customers as possible. We believe lowest cost of fulfillment is extremely important in monetizing India's gold. And that's exactly what we have been working on. So I would request all of us to have a look at how the future of India's gold monetization could potentially look like. This is our version of the story. We'd love to hear yours and build it together. Thank you.
10,72,550 rupees. Your entire savings with interest till date. Keep it.
Keep it? Why? I don't need it right now.
Well, then keep it stacked up in lockers or pillows or any other safe area till you need it.
And why would I do that? I would rather invest it in FDs or bonds and make money out of it.
Well, why not? When you have been doing the same with your gold forever, keeping it till you need it.
That is because I don't need a gold loan.
So you think using gold means gold loans? That's it? It has no other use like cash has?
Well, no. It is an investment for the rainy day.
Okay. And when does it happen? The rainy day. And what kind of investment it is? That gives no returns.
But that's just how it is. Because it's gold. It's different. Is it not?
Is it different? Does it have to be different? India loves gold and contributes to 25% of the global gold demand. Our gold holdings collectively exceed 25,000 tons of gold. That's $2 trillion worth of gold. Even at 50% LTV, that would mean $1 trillion worth of money in our hands, fulfilling needs, driving aspirations, fueling growth where it's due, and yet it remains a dead asset. But not anymore, because Rupeek is here to change all that. Rupeek makes transactions in gold as simple as banks do with cash. Deposit, invest, borrow, spend, pay, repay, everything at the tap of an app.
I simply start by depositing my gold to first open Rupeek's gold account, just like a bank's savings account, through Rupeek's convenient doorstep service, or, as I prefer, Rupeek's breakthrough GTM machine. My time, my terms. No questions asked. Just a few clicks to deposit my gold into Rupeek's safest locker. A locker that unlocks a whole new world of golden possibilities. Like I can drag and drop my way to some instant rupee credit to meet that sudden need, accessible in just 5 seconds, with interest charged only when I use it for the amount I use it. Rewards to pay electricity bills, school fees, internet bills, even buy something I wish for, all through few clicks on my Rupeek app. Increase or decrease my credit limit by simple drag and drop, and swipe my gold-backed credit card to grant me everything I wish, enjoying 37 days of totally zero interest. Shop online on merchant site with Rupeek's exclusive buy now, pay later, with amazing rewards, all at 0% EMI. You can also scan and make payments right from Rupeek app. Want your gold back for occasions? Just tap on your Rupeek app. This is our gold back, as safe as if it were with us. Everything with just one Rupeek app.
Rupeek is a complete financial ecosystem of simple solutions designed to monetize gold.
Thank you, Sumit, for those inspiring words. Coming up next is our second panel of the day. This time, the theme of the panel is Bharat Tech, Unlocking Credit at Scale. May I first invite our moderator, Japan Doshi, Head Technology and Product at Rupeek. May I also invite our panelists, Prashant Ranganathan, CEO, PayU Credit Lazy Pay, Sahil Kinney, co-founder and CEO, Setu, Manish Bhatia, President of Technology, Analytics and Capabilities, Lending Card, and R.B. Ramanathan, co-founder, JustPay and Hyperface. Gentlemen and Japan, over to you.
Hey everyone, welcome to the panel discussion on the role of product, technology, and data in enabling access to credit to the next billion in India. We have some exciting panel members with us today who have been at the helm of changing the credit landscape in India, leveraging product technology innovations. I would like to first welcome and introduce each of the panel members. Please welcome Prashant Ranganathan, who is currently the CEO of PayU Finance. Prashant was a founder and CEO of PaySense and has been building credit products for more than a decade. Welcome, Prashant.
Thank you, Japan, for having me. Good to see you all. Happy to be here. Yeah, look, I think Japan already kicked us off with an intro. I do run PayU Credit, which you may have either seen in the form of Lazy Pay or PaySense, and we have our own NBFC. Prior to being at the helm of PayU Credit, I ran PaySense. I was a founder, CEO of PaySense, where we built consumer lending products for the young millennials of the nation. Prior to that, I was at PayPal, and during my stint at PayPal, I launched both their consumer as well as their SMB credit businesses. Now, those are both multi-billion-dollar businesses. I think I was on the founding team of both those products, which is my claim to fame. Engineer at heart, but yeah, I've been an entrepreneur. This is my third startup that has been exited now to PayU. Yeah, looking forward to this discussion with you all.
Great. Thanks, Prashant, for your time and being here. Next, I would like to welcome Manish Bhatia, who leads the technology, analytics, and capabilities and lending card. Manish is a close colleague of mine, has been in tech for more than 2 decades, and was a CTO of Amazon Pay in India prior to a stint at lending card. Welcome, Manish.
Thank you. Looking forward to the discussion.
Next, we have Sahil Kini, who is the CEO and founder of Setu, which is a tech company building API infrastructure to enable fintechs to offer a range of financial products. Sahil was also an early member of Aadhaar team and is also a volunteer at iSport, contributing to building India Stack. Welcome, Sahil.
Hi, Japan. Thank you so much for having me. Excited to be a part of the discussion. I see some familiar faces and it should be really fun. We build connecting infrastructure, like you said, connecting software that connects regulated financial institutions with any third-party application, because I have a fundamental belief that any app can and probably will become some version of a fintech app in the future, and we're working to build infrastructure to enable that. Thank you so much for having me, and hello to everybody.
Great. Thanks, Sahil. And lastly, we have Ram, who was the co-founder and CTO of JustPay, a leading payment infrastructure platform in India. Ram is now building Hyperface with a mission to enable fintechs launch credit card and BNPL products. Welcome, Ram.
Thank you, Japan. Thank you for having me here. Look forward to have a great conversation with you all.
Great. Thank you all, the panel members, for joining us today during Rupeek for India event. It's an honor for us to have all of you here exchange your thoughts on the role of product, technology, and data to enable credit to millions of Indians. To set the context for our discussion, let us first acknowledge how large is the credit problem in India. India has a population of 1 billion people, but only 40 million people have access to credit cards and formal source of credit because of the lack of credit history. And unlike Western countries, where the credit penetration is pretty huge, where 95%, more than 95% of people have access to credit and credit cards, Indians are still deprived of credit. And this despite the fact that 95% of Indians' net worth is in some form of assets like gold, which is largely untapped when it comes to their credit needs. So let's first start by understanding why this has been a problem and how is the landscape changing with evolution of product, technology, and data. Let me first go to Prashant. Prashant, you've built successful lending products and companies leveraging data and tech for multiple years. Would be great to get your thoughts on how you see the role of data and technology reshaping the lending landscape over the last decade.
Yeah, so look, thank you for asking me this question. It's a bit of a lead-on question. Look, I've seen credit over the last 10, 12 years. I know people around the room perhaps have seen it for much longer. Credit has taken various shapes, but the fundamentals of credit are always the same, right? Like I think while we have seen the surge in personal loans, and then we've seen the surge in payday loans, we've seen the surge in BNPL. Now we're seeing it in the form of card form factors. These are all ultimately credit in different modalities, but the fundamentals of credit have remained fairly the same across the many years. The way I see it, look, I think I'll touch upon the point you made. You know, 1 billion people with 40 million of them who can have access to credit is a shocking number, right? That has to change. If we have to become a $5 trillion economy, if we have to see the progress that we all aspire for Indians at large, then I think the credit mix or the credit access has to fundamentally change. And I don't just mean access at all costs, right? It has to be affordable and sustainable systemic access to credit. And that can come in two forms. One, which you guys are doing, which is, you know, asset-backed credit. So someone takes a physical asset, puts it up, and says, hey, look, I'll make up for the lack of data or the lack of underwriting in the form of a physical asset, right? I'll give you something that we can both value, and then you give me credit on the back of it, and I'll establish credit that way. The other form of establishing credit is, you know, like you mentioned, data, right? India is data rich, and more of us have digital exhaust that is very comprehensive. So if you can actually make sense of that digital data and you can use that as a asset, then you can also build credit that way, right? That's more of your unsecured lending, but it's using data to create intelligence around who can afford and who can, you know, who is willing to pay as well. So both the affordability and the willingness get solved that way. We take the approach, the latter approach, which is the low and grow approach of BNPL. We start people off by creating a convenience play through Lazy Pay. You know, I'm sure almost everyone can afford a 200 rupee meal on Swiggy or Dunzo, or pick up some grocery at Dunzo. But that starts a journey, right? That's not a ability to pay question, it's a willingness to pay. And it gets a customer habituated to creating a contract that they then honor, right? So where they say, I owe you money, and then I pay you money, and then I owe you more money, and I pay you more money. And that systematically establishes their habits. And at some point we underwrite them for full-blown credit, right? Which is once they've established themselves on the bureau, or once they've kind of been able to, you know, demonstrate good behavior on us, and then we're able to use that as a means to underwrite them more holistically. But these are the only two approaches. The third approach, which I'm not a huge fan of, is, and I'll say this is controversial, is the private equity approach, right? Which is you dump a bunch of money in the country and let credit behaviors, you know, play out, and then you find out 3 years later if you know what held and what didn't hold, right? I think that's not sustainable, and I think that's not one that I think we as India should perhaps get too used to, because those are a flash in the pan type of approach. But the first two are solid, and I'm a big fan of both.
That's great to hear, Prashant. And if you want to add a little bit of color on how you have built this rich credit history or data, you know, as you talked about, you know, starting with small lines or small credit, what goes behind it? Do you use a lot of kind of data science, machine learning algorithms? Just curious about the tech you use behind.
Yeah, so we are fundamentally built on a trust graph approach. We've been building this over the last 6 years. A trust graph is basically saying, hey, I don't know much about Sahil. Sahil's new to credit. But instead of just looking at Sahil as a discrete, you know, person, entity in isolation, because that's not the reality of the world, right? Sahil is actually connected to Manish, and Manish is connected to Jimit, and Sahil's also connected to Japan, and Sahil's connected to Ram. And I can use the information, and while I may not have enough information on Sahil, I do have enough information or some information from transactions, from credit, from repayments, from buy now, pay later on each of the others. And I use that to impress upon or create an impression of what Sahil's behavior would be like. We are a social creature, right? And birds of a feather at scale, and I can prove this statistically, do flock together, right? So that is one of the core ways of how we underwrite. So in fact, we have a trust graph of about 700 million people connected some 6 billion ways, right? So there is nobody in transacting digital India that is not in that graph. And there is nobody that we don't have at least some, if not very, very deep information on, right? So we use that in real time to build an impression of like what, you know, the unknown person or the new to credit person might be like. And then we then, you know, we then kind of offer them credit. The true test is, is when we offer them that credit and whether they pay us back or not. But most times a trust graph based approach works very beautifully.
Super, that's great. I think I remember at Amazon, we were largely looking at consumers' shopping behavior data. We had not looked at this whole trust graph that you mentioned. So great to hear kind of the innovation that you guys are driving. And so data has been a big challenge, for this kind of lending to work. We talked about assets as one property and data is another one. And I know how difficult it has been to get access to data. And that's why I think the next, I wanted to, Manish, Lending Card was at the front runner in terms of partnering with Sahmati and banks to leverage account aggregator framework for lending. And to just solve this problem of, standardizing the data exchange across the industry. Can you tell us a little bit about what is account aggregator and how it can help unlock credit for millions of MSMEs and individuals in India? What's behind it, and how did you guys approach it?
Yeah. Thank you for that question, Japan. Just to start off, right, to add to what Prashant actually said, there are basically two parts. One is collateral based, one is non-collateral. At Lending Card, we basically focus on non-collateral, and for us to be able to trust someone, we need tons and tons of data to figure out, whether, this customer that I'm going to trust with, some level of money and loan, is he going to pay that back to us? Now, there are various ways, and over the last 6-7 years of Lending Card's journey, we've actually devised various ways of getting that data. Now, what specifically is account aggregator? If you look at the Uber, if you look at what did Uber do? They came in and basically completely organized cabs. What did Amazon do? They came in and aggregated product and organized product so that discovery becomes easier. Now, what does account aggregator do? They've come in and actually helped organize the financial information, at least to begin with, right? So where, and it's very consent based. So if a customer has three banks, some insurances, GST, and I'm also talking about some future look at what account aggregator could do, is actually ability for the customer to say, I'm going to apply for a loan at Lending Card, right? And while I'm applying, I want to give consent for Lending Card to pull information of my 3 bank accounts, 2 mutual funds that I'm holding, and probably car insurance, so that overall ability of Lending Card to understand the customer and provide better loan facility becomes even greater. So that's what account aggregators come and a much needed framework in India so that we can fast track. You mentioned about 2 to 3% of Indians have access to credit. It's an abysmal number, right? How do we get access to data so that we can break that chain? So that's what that's why we are so excited about account aggregators. So access to data, democratizing data would become much easier. Now, how do we use that to provide credit? So overall, looking at data, maybe account aggregator, maybe bank statement, maybe trust graph, throughout the value chain of your loan, there are different segments. One is, how do you acquire the customer? Now, for acquisition of a customer, you need his information about probably some SMS data, his trust scores, score about, who is he connected with, how is he transacting, so that we can have a better lead coming in. After that is credit underwriting. Using that data, at least what we do is understand the entire MSME's P&L. how much is the credit, what's the debit, what's his average daily balance. Over the years, we've been able to sort of build on that and build a good performance metric on providing credit. Then is the portfolio management. Once the customer is inside, right, how do we make sure that either he's becoming a better at credit or worse? How do we get early warning systems to figure out, is the customer degrading in his credit position or actually upgrading? Now, how do we sort of monitor that and provide better service to our customers so that he'll be able to pay and obviously increase his credit worthiness, right? The last part is collection. So if the customer is not able to pay, there's a default. Now, how do we use data to figure out, what are the other loans that the customer has with banks? Is he paying those? So overall, data is the key, right? It's going to change the game, especially in India, because, the market is huge. So, that's where account aggregator and just in general data can play a huge role to, break that cycle.
I can't agree with you more. In fact, I feel this is one of the largest innovations happening in the world. How sort of UPI went and disrupted payments, and other countries look to India to solve for payments. Similarly, lending, account aggregator, and even Open, for that matter, what's coming in the line, or I see as some of the biggest innovations. And it must be hard to build this, right? So with banks, everything was new. Protocols were not defined. APIs are not standardized. How do you guys crack the tech part of it?
So obviously, we were very involved. So, all kudos to Sahamati, RBI, and various different regulations who actually helped devise these things. We were the front runners, at least from a specific of how do we use financial information users. So really push that boundary. And it was, it's no different than launching another, API, right? So there were a lot of misses. We figured out that, some banks give information in a certain way, the others don't. Even if the APIs are standardized, there are so many things that you don't think about. You think about payments. Payments is a very simple use case, if you will. And if you look at account aggregator, it's actually at least 100x complex of how do you sort of bridge all of these different use cases to come out with that. So I think it's been about a 3, 4, 5 year journey to get to this point. We have 4 banks currently live, and it's fabulous. Our conversions are better. It's actually twice what we used to get with bank statements. So definitely a game changer.
I'm really watching this space very closely, because even in our industry, in asset-backed lending, it's not just the data exchange. In our case, for example, we move gold, and banks have to really do the maker and checker process on the gold that we collect and appraise. And I'm really sort of looking forward to expanding how the account aggregator and open source frameworks can include the whole use cases around asset-backed lending, because the leverage that you get is just enormous. So
enormous, absolutely.
So that's great. I think as a fintech, it's a lot of pain, right, to build all this, and that's where I feel the roles of Setu and what kind of Ram is doing starts coming to play. I wanted to ask this question to Sahil. Like, you must be having a lot of these fintechs coming to you, and they're all kind of trying to build multiple credit products, and not all fintechs have resources to do the integrations with banks. Can you just tell us a little bit about what Setu is doing, how you're going to help create this API infrastructure and help all these companies like us who are trying to give or solve credit for masses in India?
Sorry, I think I was on mute. Absolutely. Thank you so much, Jatin, for having me and for asking me this question. I think, like you pointed out, right, doing a deep integration with any regulated financial institution is a non-trivial task, and this is not just for lending. The same would apply for deposits, would apply for payments, would apply for most other kind of extracting infrastructure or products that are within a regulated financial institution and making it available within another surface. Now, that sometimes that other surface could also be some marketing property of that bank itself, right? But what I'm saying is making it available outside of their core systems is a non-trivial task, and it is something that requires not only a technical integration where you're doing APIs and when you're doing an API integration, there's a lot of other things. Not just having an API is not enough. Having good documentation, good error codes, good test data, and figuring out when that. This is what Manish was referring to. That just because you have the APIs doesn't mean that integrating with them is a trivial task. Right? The tech is probably the last thing that happens, and all the other clearances will happen in parallel or will happen as you kind of actually end up doing the integration and getting the engineering bandwidth and all that. So what you end up seeing is that we're going live, we're working with someone, it's happening, it's going to happen next month. The moment you hear it'll happen next month, that they really don't know whether it'll happen next month. They're hoping it happens next month. They've done a lot of the work. It's possible that it can happen next month, but probably not probable. Right. So, and this is something that, more than one partner, and it's not just fintechs. I mean, I think what we're seeing is a more universal kind of secular trend across technology companies that have any kind of distribution to say, how can I monetize my distribution more efficiently? And how can I go deeper and ensure stickiness and ensure returning users and all of that. And financial services is a wonderful way of achieving that particular objective. So it's fintechs plus others who want to provide, either credit or some other financial services that want to avail of these products and services from within their third-party application. And so what we do is we view it as, plumbing, we view it as masochistic samaj seva, where we go through some pain for ourselves so that the ecosystem can benefit. And we also view it as a very strategic and sustainable business model in the long term, which is to say that, look, we are in the business of making sure that connecting infrastructure is available, ready to go, high performance, and easy to use. So that to be able to do that, it takes time. Infrastructure business is like that, and I'm sure Ram will commiserate with me. He always does, and I commiserate with him. Building this kind of stuff is time consuming and requires a lot of patience. But once we have done this integration with, say, we've done it with some of the largest banks, and for a given product, let's say we have multiple suppliers, then it is even multiple, even if I mean two, there's a redundancy, good enough. Then there is, a lot of value prop for the demand side, where I mean developer partners to say, look, let me just use Setu because this is InfoSec audited, this is compliance vetted, this is legal contract and framework is done, this is compliance has approved it, and the tech works, and the error codes are great, and the documentation is good. I can go to the bank or the FI directly and then spend a 6 to 9 month sales plus integration cycle getting this product live and maybe save a few bips, or I can pay that bip to the arms dealer, aka me, saying that they already have the guns ready to go. Let me, and they probably will work better, and they'll take responsibility for having them work better. So I think eventually, there'll be at least one, if not more, middleware players such as us, which will be providing these connecting APIs between financial institutions and third parties, and enabling kind of, for example, retail credit products to flow through those connecting pipes. So that's how I look at the business model and what we do.
That's what you just said. I think all of us on the panel, it resonates so well with all of us, because all of us have gone through this deep integration pain points with banks and multiple lenders, and that, in the absence of lack of kind of standard protocols, makes it even more challenging. And as we see here also, right, when I look at the asset-backed lending or unsecured lending, in both the cases, I think we know the capital is going to come from some of those big banks and lenders. We have this fundamental components, constructs of underwriting, data exchange. A lot of that continues to be the same. So for me also here at Rupeek, when we're trying to build this asset-backed lending use cases, something like this, if we have an API infrastructure available, I think we can really spend our energy on building consumer innovations for the customers. Like, imagine customers, what we're trying to build is, any customer has gold. We're saying, hey, deposit gold, but then you can avail the range of financial services, whether it's credit card, whether it's buy now, pay later, or you could possibly even earn interest on your gold. But all of that is not possible unless I have a robust backbone of kind of banks and lenders. And
Yes.
honestly, today our growth is capped by our ability to integrate with a lot of these large banks and lenders. So really, great to see the work Setu is doing, and we're really hoping that someday we can leverage the APIs. With that, I would, I know Ram is also on a similar mission, right? Then there are companies who are trying to deliver consumer innovation, like a lot of other financial products, and having, I know Manish would acknowledge, launching a co-branded card at Amazon was like a 1.5 year long project, and it was painful. I think Ram, you're trying to figure out, how do we build a modern stack for credit card and BNPL, and so that it becomes very easy for fintechs to launch these products. Why don't you tell us a little bit about your vision and how you're kind of planning to solve it?
That's correct. Look, just taking on from where Sahil left off, one of the things that I often hear in the ecosystem is that, look, what's an API? We've also built an API, right? Almost every institutions actually tell us, specifically the banks also, right? The measure of a true success of an API is not about whether your API is simply working, but can you make the developers fall in love with the API, right? That's the true measure of the success of an API, right? And I'll leave it at that because that really captures the essence of how we think about creating those APIs, crafting those APIs. It has to be almost like an artwork, right? And now coming to the problem again, Prashant and Manish actually talked about how we can put data to use. Just queuing on that one, look, the general purpose data is quite useful. Now, on top of that, if you are able to do some kind of signal boosting and make even more specific data also useful, when you layer these two together, you get much richer information about the customer, which can actually lead to better underwriting capabilities, right? To give you one example, think of an HRMS platform, which actually has access to payroll information and the history of employment information with the customer. Now you put this data together with the account aggregator data and all the other digital exhaust that Prashant was talking about. Now suddenly this becomes really powerful, right? Really powerful enough that we are seeing now that for a bank to say that, okay, hey, you know what, basis this information, I can give out a credit card. Right. And this is essentially what we are doing here at Hyperface, right? We're saying that, okay, there are two parts to this problem. One is you take that specific information and then try to analyze this data closely and evaluate the credit worthiness of the customer. Now, technically speaking, this data is not standardized. The data that comes from, say, a platform like a Meesho about the seller ecosystem and the seller earnings is very different from the data that comes from an HRMS portal about the payroll and the employment information, right? And you could actually have several such verticals. Now, all of this has it's a lot of asymmetry in the data, but this data is extremely valuable, right? So with technology, how can we make it extremely easy for the bank to be able to consume this data, arrive at create a score for the customer, and then make a decision whether the customer is now eligible for a credit product or not. The second part of the problem is about delivering this, right? And this is a lot more difficult as well. This is where Sahil talked about, how do you actually take this from the banking surface to a third-party app, right? Now, here a lot of regulations and compliance really bogs down companies from focusing on the consumer innovation, as you were talking about. Right now, how do we address this? How can we provide a cookie cutter solution when it comes to an experience, right? Because ultimately, the consumer product doesn't change. It is either a personal loan or a car loan or a credit card. The shape of this particular product, which is delivered to the consumer, doesn't change at all, right? The experience is almost symmetrical across all the cohorts, while the data about that particular consumer itself is asymmetric. Right now, given that this is a symmetric problem, can we come up with a cookie cutter solution? What does it take for an HRMS portal to go live with a co-branded credit card? What does it take for an e-commerce company or the seller side of the e-commerce company to go live with a credit card offering for that can be embedded into the seller app itself, right? And how can we make this easy, far more easier, and allow companies to build richer experiences, right? So that they can layer other things on top of this particular embedded product. Now, all of this is something that we obsess about at Hyperphase, and essentially, what is our KPI? If you look at it that way, how can we reduce the time that today it takes? It's about a year for a company to actually launch a co-branded credit card. Now, how can we bring that to about a month's time? And on top of that, allow these companies to be able to layer more and more innovation and experience, right? Now, this is simply a process of efficiency and a process of unlocking better value, both for the bank and for the brand partner that we have, right? And truly build a platform, focus on building a platform, right? So that many such vertical cohorts can actually roll with their products faster, right? And this is a way that we see how credit expansion could happen, because a lot of data today exists. We look at companies from healthcare domain, from creator economy focused ones, from the e-commerce marketplaces to insurance marketplaces. A lot of these companies exist, and they are sitting on huge data, which is just waiting to be unlocked. And in return, for launching a financial product, right? So that's how we are seeing this problem, Japan.
Very, very nice. Thank you, Ram, for sharing your thoughts, and very exciting in terms of what you guys are building. So we heard sort of a lot of innovations here: trust graph, account aggregator, API infrastructure, credit score. Let me kind of go around the table and ask you one more question. We're all trying to sell credit, and there's a billion population out there. And if I go kind of around, and if I have to ask you one question, like if you have to pick one innovation, technology or product innovation that you think will change lives of Indians, right? Yeah, you're gonna have this, all of you here. What would that be? How you think it can solve the credit needs of India, or just the lives of Indians who are sitting out there? If I can start with maybe Manish.
Sure, yeah. I think it's a very, very interesting question. And overall, it's just my personal view that, there isn't just one innovation that is the silver bullet, right? For any innovation to work, maybe Bitcoins, maybe blockchain, innovation, once that happens, it's the ecosystem that also has to evolve around it, so that people have access to that specific innovation. So for us, right, from a credit standpoint, data is key for us to sort of be able to, obviously, if it's asset backed or non collateral, having access to data to understand the customer is super critical. Now, how do we get access to that? Obviously, there are different frameworks. Obviously, you can get bank information, you can get GST, you can get tax information, you can get all of this information. Now, the question is the customer actually filing taxes, right? Is the customer actually, doing transacting? Is the customer actually transacting using UPI, right? All those things become super important for us to get to that level. So I feel COVID was this one big event that has forced people to move in the digital direction. There are multiple, I cannot name one innovation that's going to change the game, but definitely the rate at which people are moving in that direction has definitely exponentially increased. So the habit, what happens is, once you see a peak, the plateau is a little higher generally. With COVID, the plateau is much, much higher. So people definitely don't, go back to say, okay, cash, my dhubi wala, my kirana wala, everybody takes UPI, right? And that's a very, very heartening position to be in. So I think that is where, as we build ecosystems, we work with fintechs, we work with banks. It's an expanding actual value proposition, right? The actual addressable market is huge and it will continue to expand. The question is, how do we make sure our customers are getting more acquainted to being digital? Maybe social, it could be Facebook, using Uber. Every single step pushes them into a digitization, which will overall help them get more closer to probably getting the credit that they worth, so that they can fulfill their aspirations. Either it could be personal travel, buying a house, or taking loans for for growth of their company. So that's my take.
Very well said. I think COVID has massively transformed how people use these digital properties, and every single data point, every single action they do, is critical to building a large set of data sets that we need as a country.
It's building a habit. Yeah. How do you change the habit? Super difficult to change habit, and I think this is one big event.
Great. Thanks, Manish, for sharing your thoughts. Prashant, what are your thoughts?
Yeah, so look, I tend to agree with what Manish is saying. Look, we've gone through this phase, right? Like in the last 7 years or so, we went through a connectivity phase where I think thanks to Jio and all the other telcos, where the whole nation pretty much got connected, right? They were plugged to the internet. They not only carried a phone with a glass, but that phone actually became a smartphone because it had a data pack associated with it. Then we went through COVID. I think we went through a massive adoption curve, right? A lot of people who would have never touched a digital payment or a digital credit solution, jumped into it head on, and mostly because they needed to. I think what Demon started, I think COVID nailed, right? Like that's how I see it. Then I think we've gone through this, and we're still in process of going through this process where fragmented, unstructured data that normally lies in silos behind like secure vaults is now systematically and safely being offered as structured data, right? That I call the gold dust era, right? Like we're in the gold dust era. And that gold dust, I think many of us as companies are packaging into gold bullion, right? We're collecting a lot of this gold dust on people and packaging it into gold bullion. And that gold bullion then becomes the asset behind which we lend. So I do think we're already on this journey, and I think I don't have a particular innovation as such. But I think the comment I want to make is, look, lending is one of those businesses, unlike commerce or gaming or entertainment or what have you, that has to be built sustainably, right? Like I think that's, and I think the innovation I want to see is continued, sustained, kind of measured growth that will ultimately yield the right outcomes for the next 100, 200 million Indians. I think an explosive growth that's premature will actually set us back 15 years, not accelerate us into the next 30. So like the innovation I want to see is in one part reg tech, one part in privacy controls, in one part how credit is issued, and how this is built sustainably.
Great, thanks, Prashant, for sharing your thoughts. If I want to be a bit biased, I'll say monetizing India's gold is the innovation that we want to drive. But there's a challenge. People traditionally see gold as a rainy day investment, right? They don't want to give a gold to get a loan unless they really need it. And we're really just trying to change that, right? We're trying to tell people that your gold is sitting at home. Why do you store your gold? It's an important asset. Like here, the company is trying to gather data, spending so much effort building infrastructure to gather data. Here you have a collateral sitting at home against which you can do a ton of stuff. I'm going to ask this question to Sahil. What is one thing that you think needs to change to convince people to store your gold if you have to get all these financial services against your collateral? When I tell my wife, she tells me no way, and I tell her about all the innovations that we're thinking about, and she's starting to change her mind. Curious what your thoughts are.
So I said, you're being a bit unfair, Japan. I spent the last 5 minutes thinking a very thoughtful answer to your previous question, and then now suddenly you switch the question on me. But I'll give it a shot.
I would love to hear your answer on innovation as well. So
I don't want to go into a long-winded economics lecture, but essentially, I think credit is it's like one of those fundamental things for the economy, dude. And our economy growth depends on credit growth, right? So it's a macroeconomics question as much as it is an industry question, which is what you asked. And so I think just to quickly answer that, there are two parts. I think one is growing the pie, which is growing the number of people who have access to credit and who can actually borrow. And the second is increasing penetration among the people who actually have access to credit today. And if you're going to look at increasing penetration, really what you're looking at is being able to underwrite risk more dynamically. This whole rack rate philosophy saying that everybody gets the same interest rate is what is leading to under penetration of credit. So if somebody needs more credit, and you should be able to take on more risk in that aspect. When lots of people need larger ticket size loans. So half the time what ends up happening is when people are approaching formal financial institutions for credit, they want credit to a certain extent. The LTV or whatever, the amount ticket size that is approved is not enough. So they'll take whatever they get, and then they will go take a much riskier loan with a much higher APR to cover the rest of the balance, which inevitably puts them into even more trouble than if they had one loan or a consolidated loan with a regulated lender with maybe a slightly higher APR. So I think there are some product construct changes that need to happen. For example, frequency of payments, 90+% of all payments happen on a monthly basis. Why? Less than 90% of India actually has a monthly cash flow. So the cash flows are not matching of the outflow and the inflow. So you need to change product design for financial services, particularly for business loans. I'm sure Manish has thought about this fair amount when it comes to how should you structure loans. Just having like a 36-month loan with monthly payments is one option, but bullets and income-based financing and having lean on cash flows, all of these things need to happen, and product innovation needs to happen for you to actually improve and increase penetration among the people who already have access to credit. Then there is the problem of getting more people into the accessible credit market, and I think that is a large question. I think data will solve some of it. But I'm a huge fan of the account aggregator ecosystem. My company makes a lot of noise about all the technology that we're building. I'm sure Manish and team at Lending Card are aware of this, and Prashant's been following us. Anyone who's part of this knows how much we believe in the ecosystem. But even I would caution against treating it like some Ramban thing that will transform everything. And I'll tell you some fundamental reason why, right? For the second part, which is growing the market itself, is not going to happen because there aren't enough women borrowing or working in this country. If our country really has to change, our female workforce participation rate fell from 30% in 2005 to 15.5% in September of this year. It is absurd. It's one of the lowest female workforce participation rates in the world. We are worse than Iran, I think, at this point. Okay, it's atrocious. And at the same time, you look at the number of retail borrowers. It has the women as a percentage of retail borrowers is about 26%. The reason it's 26% is only one word: microfinance. Because 98% of all borrowers in microfinance are women. It seems like people are lending to women all the time, but that is not true. I will actually, tell Manish or even Prashant to look through their data, and they will see an absurd underrepresentation. Even for a millennial a lending product which is convenience based, which should not have that much of a gender difference because everyone is Angres and enlightened and has a mobile phone and all of that. I will guarantee that it's a 75-25 split in Prashant. I don't even need to look at his data to be able to say that.
That's very interesting you said that, because now I'm connecting the dots. The panel one and the earlier part of Rupeek for India was all about the policies and the economics and how that needs to change to support what we are going to do over the next few years. So very interesting perspective. Speaking of gold, what do you think? What would it
gold
take?
Is emotional, man. 6% of our household wealth is in gold. So you said 95% is in real estate or gold. 89% is in real estate. So land is the only thing that is even more emotional to us, and we will kill our family over it. And probably the second thing, which we probably also will end up killing our family over, is gold. Right. And it has been viewed as an emergency savings fund. It has been a break in case of glass kind of this thing. I think fundamentally, if you're able to give people assurance that their gold will come back if they do Y, right? And here are the protections that are there on this gold. Assurances on, we are not interested in selling your gold. We don't want to. We want to give your gold back to you. And I feel like that should be a message you should be screaming at your customers all the time. Because the entire, girvi is such a, rational arguments will not work. You need to make people feel safe. And that is a limbic system argument. And so once you do that, then the higher order thinking of what else can I do in my gold? Can I borrow around it? Can I put a lien on it? Can I invest against it? Can I get a credit card? All that is just, you can't make a cerebral argument towards an emotional response. And so that's the only thing that I would say on that front, which is, you'd have to create emotional reassurance to be able to layer these products on gold, at least in India.
And I just feel that somewhere, Sahil, the first thing you mentioned, right? Women workforce and gold is somewhere connected. It's a mental roadblock. Yeah.
Yeah, they don't call it Sridhan for nothing, right? So I mean, there is a connection there.
Absolutely.
Yeah, no, I think you guys are spot on. I mean, the trust, the emotional connection, and because of that, ensuring that trust is something what we are really working hard towards. And I always wonder if beyond trust, right, which we're trying to introduce by through our bank partnerships, to our brand and whatnot. I always wonder if product or technology has any role to play in either enhancing the trust or removing that stigma. So I always think about it. Curious if anyone has any thoughts on any product or tech constructs would play a role.
I know about product and tech construct, but I briefly consulted with Titan for a little while earlier in my career, and you'd be interested to know that only their premium brand is called Tanishq. Everything else is called Tata Gold Plus, because Tata is the brand that inspires like trust. You put Tata on it, they'll be like, fine, I can buy from here. Tanishq, and then when you get even fancier, you go to like Zoya and Mia and all those first world yoga names. The name Tata reassures them. So, I mean, it's not a product or engineering answer, but when Tata introduced a gold testing, a purity testing method, their sales kind of shot up because that again was one of those things that created trust. The other thing that they did, which was a financial innovation, again, there are plenty of interesting case studies, right? You study Tanishq itself and you'll get lots of insights on the relationship between gold, trust, and financial instruments. And so Tanishq was, a cash flow positive. I mean, it was a positive working capital business, which means they had negative cash flows in the short term because of a working capital cycle. They actually flipped that into a negative working capital cycle business by essentially introducing the gold savings plan, where you pay for 11 months and then the 12th month they pay for it and all of that. So saving towards gold, leaning into existing tendencies might be another way to kind of think about financial engineering on top of precious metal.
Great. Any other thoughts from anyone else before we close this panel? I know we're coming closer to the end. So,
just I know Prashant touched on one thing. That credit growth has to be sustainable, right? And I couldn't agree more. And with access to data, things are not going to overnight change, right? It has to be performance-based data. For example, when you go to buy at Amazon, you have recommendations. Now, the recommendations today is, say, 100 times better than it started. And the reason it's better is because every year they have performance data and they've started to improve on that. But an innovation of such, right, actually constrained your future potential and growth. So recommendations is, the better your recommendations, better cross-selling you can do, get a better revenue you can get. In credit, it's very, very different, right? Where without good performance data, forget the growth, it actually comes back and eats into your capital. So which is the scary part, which is why it has to be sustainable. So I just wanted to add that.
Can't agree more.
Look, Japan, I also think that we have to consistently work towards making credit delivery cheap for larger institutions, right? Today, the needs, again, as you go down the hierarchy, the need of a person to apply for say a 5 lakh personal loan, it's not going to be there, right? It's probably going to be a 50,000 rupee personal loan. Now, if it's going to take, say, 2,000, 3,000 rupees in order to deliver that loan to that customer, then the bank is never going to be able to recover that. So how do you consistently work towards reducing the cost of delivering that, and then also working towards the collections mechanism, right? So innovations there will have to help. And now when you actually circle back to, okay, so given that this is a problem, suppose we solve for credit delivery, and suppose we even solve for collections, but even then there is an apprehension for the larger institutions to go out and provide credit to the informal sector, right? I think there certain economic policies also will have to help. For instance, just like in the fundraising, nobody is interested in writing the first check. Everybody wants to do the last check. Similarly, can we actually think about creating an incentive for the bank to be able to sign up for NTC customer? Today we have a stick, which is the priority sector lending, but can we create a carrot mechanism? Can there be differentiated MDRs that can be given to servicing the lower strata of the economy? Can a bank be incentivized for creating a new entry in the credit bureau for an NTC customer? Right. So if those reward structures can also be created, I think institutions will move in the positive direction, right? So it has to be a combination of product, tech, and economic incentives as well. That's my 2 cents.
Thank you. Thanks, Ram. I think it was great to hear you all. What I found very interesting was all of us here while we are sort of product and technology leaders, what is coming out loud and clear is the appreciation we need to have about the economics and the business and the policies, and how do we create a sustainable growth is what's going to drive the credit growth in India. And it's amazing to see that the leaders here are so connected, deeply connected with the business and the economics, so that all the product tech innovations that you can build are kind of trying to fit into that broader ecosystem and drive this leverage. So with that, I know we are coming over a little over time, so would like to close this panel. Would really like to thank each of you to come over and share your thoughts. It was a great conversation. I'm sure 1 hour is not enough to discuss credit. How do you solve credit? But I hope the audience got a little bit of gist of how each of us are thinking about it and how we're driving the innovation. So with that, I would really like to thank you. Would love to have you again at some point, and would love to collaborate and partner in solving this problem for India. So thank you so much for attending today.
Thank you. Bye.
Thank you, Japan, and thank you, panelists, for those insights. May I now invite Sumit Mania back on the stage for a vote of thanks.
Thank you all for joining in. It was quite an engaging and interesting discussion. Thank you all the leaders for sharing their thoughts on how can we potentially create a playbook for monetizing India's gold. It was quite enriching to learn the thoughts and future plans everyone has on this topic. Thank you.
Thank you, Sumit. And that, ladies and gentlemen, brings us to the end of Rupeek for India. I'd like to thank our keynote speaker, Mr. Gandhi, our special invitee, Ms. Arundhati Bhattacharya, all our panelists and moderators. Thank you, members of the audience, for tuning into Rupeek for India. I do hope it's been a good learning experience for all of you. We'll see you again soon. Until then, stay safe.